Welcome to episode 14 of CRYSTALCAST. In today's episode, we're joined by Martin Reynolds, Chief Executive of Simply Biz Mortgages, who talks through the changing role of today's advisor. As always, if you like what you hear, please feel free to click subscribe and stay tuned for future episodes of CRYSTALCAST. As always, all the information provided is for the use of financial intermediaries only. Today we're joined by Martin Reynolds, Chief Executive of Simply Biz Mortgages. Morning, Martin.
Morning, Chris. Thanks for the invite.
No problem. Thank you for joining us. For those of you that have been listening for a while, you'll know the first question well. Can you tell us 3 surprising things about you?
Always an interesting question, this is, as to what you want to admit in public about yourself. Number of things. So, yeah, I've actually been a catwalk model. So I trod the board, so to speak, at a wedding fair, the one. So it was quite nice, actually, walking some very beautiful ladies down the aisle a number of times. Felt like I got married about 9 times that day in different outfits, which was it was good fun though for a friend. We did that and really enjoyed it. To be fair, second one for me would probably be dancing to New York, and then the conga with the cast of Emmerdale at about 1 o'clock one morning in Leeds in a hotel bar. Enjoyed a good conversation with, I think it's Eric Pollard afterwards, but it was good fun. It was good fun and a little surreal as they were playing with people that you knew.
Yeah, I'm sure that's a story for another time.
It probably is. It probably is. And the third one is probably more about my father, actually. So just his claim to fame, maybe, is my father did about 3 or 4 years in the RAF out in Germany. And his best friend at the time out there was Jim Dale, who then went on to star in all the Carry On films. Okay. And according to my dad, he still has his guitar.
Wow.
Jim has my dad's guitar, rather, so yes.
Certainly surprising things
yes.
in there, thank you for that. So you've been Chief Executive of Simply Mortgages since 2012 now. So what are the biggest changes you've seen over that period?
I think the market's changed massively over the time. I think we were coming out of the recession. So us as a business in 2012, we aggregated just short of £2 billion worth of mortgages, and last year we grew and we're at 14 billion. So we've actually seen some big growth in our numbers and the support that our members have seen, and our membership has grown during that point. And again, not just on the mortgages, but our protection APE has also doubled during that period. So we've been really successful in that part. But I think if you look at it wider, there were only 5 staff when I joined, including myself, within the mortgages part of the team. All office based, so I was the only person that was out and about doing all the events and doing all the meeting and greeting, and in that time now we're now currently at 13 staff. Okay. With 4 people permanently on the road, and last week we advertised for 5 new roles, so hopefully by the end of the year we'll be up to 18 staff. So you can see we've actually grown commensurate with the volume and what we're trying to achieve with the members. And then as a group, Simply Biz Group, we've grown. We've had 5 acquisitions in that period, and we floated on the stock market as well. So there's always something happening within Simply Biz.
It's a busy 7 years.
It is.
Yeah. And how have you seen the demands on the broker change over that period?
Immensely. So regulation has been huge. Mm-hmm. So if we look back over that period, we've had RDR for the IFAs who we work with. We've had MMR. We've then had MCD, followed up not too long afterwards. We're currently going through the mortgage market study. We've also had to deal last year with GDPR, and we got senior managers and certificate regime. So all of those things have happened in 7 years. And when you actually look and start writing it down, you go, wow, actually, when has there been a period of just calmness and not much change? And that hasn't been there. So it's been huge changes in regulation. We've also seen lender requirements have increased. There's been a focus on quality, which is good, right first time. Mm-hmm. And there's been a greater understanding on fraud, which I think has been really positive. So there's actually been a lot for the broker market to actually get its head around and understand, while still trying to deliver quality service to its customers.
Yeah, and do the day job of actually getting the deals
Absolutely,
funded.
Absolutely.
Yeah, it's one of the things that stands out for us with Simply Biz is the education. It's a big part of your business. There's a number of roadshows and things there. Do you think that's as important now as it was a few years ago?
Absolutely. I think we permanently do over 80 events a year, And the key reason is that it's education. It's getting out in front of members. It's talking to them. It's bringing lenders. It's bringing providers and ancillary people like yourselves out there to talk to members, to explain what's happening in the market, to give them ideas of how they can help their clients. So we're always there. We do webinars. We've got magazines that go out. It's all about education, because ultimately the market's constantly changing.
Yeah.
So unless somebody centrally can actually help pass those messages out, it's quite hard again with everything else we've discussed for advisors to keep up.
Oh, definitely. So what role do you think specialist finance has got to play in the industry?
I think it's becoming more and more important. I think products and criteria have expanded and become more complicated over the last 4 or 5 years. I think the market as well, and the customers have become more complicated over the last 4 years. You know, their lifestyles, their job profiles, their credit histories, how they're paid, how they cohabit, etc. So it's hard to be a generalist now.
Yeah,
I think you can't be that because it's such a wide breadth of a market now. So the advisors need support, and they need help from specialists like yourself who've got that expert knowledge. And we've also had an increase of lenders to the market who have come with limited distribution as well. So they're not whole of market. So again, they've been dealing with the specialists, finance brokers, master brokers in that market. So I think that specialist market is really playing a key thing, that, you know, the high street is not accepting everything. We've got the core building societies that are moving into these niche areas and bespoke underwriting, which is really good. But it's those specialist lenders and the specialist finance, whether that's commercial bridging, etc., and the secured loans, that's actually helping that market continue and keeping change going.
Yeah, I think that's where education's so important. Because,
Absolutely.
We can go out and teach people what a bridge is, and we can tell them what development finance is and how it works. And people think they've got that knowledge. They don't need to hear from anyone again. But as you say, building societies are changing what they do. Lenders are changing appetite. There's always something different. There's always a different way to look at things.
I think so with the market, especially with the newer lenders, that they'll come with a product set and a criteria set at launch, and that could be what their funders want. That could be what the regulator is happy with them to do initially. But if you look at some of those lenders that are new to market, if you look at where Vida are, where Fleet are, where the mortgage lender are compared to when they launched 2, 3, 4 years ago, they're unrecognisable. So actually being able to keep up with those constant changes of where people expand their criteria, tweak it, add things to it, moving into Scotland, moving into, you know, the regulated bridging, all those areas.
Yeah.
You can't stand still with a lender. You need to know constantly what they're doing and how they're evolving.
And what are your thoughts on fintech in the industry?
Yeah, it's the buzzword at the moment.
It is.
It's improving. It will improve the process. It will improve systems. You know, lender integration is obviously the key focus at the moment with everybody. We had the first wave of the criteria help with technology, with Criteria Hub and Knowledge Bank, who I know were one of your previous guests. We've seen a few of the others playing around the edges there, but the lender integration seems to be that key focus, and that's good. And I think that's great. It's going to stop rekeying. It's going to help that. It's going to go through. I think the key bit for me is not forgetting the customer at the end of this. I think it's great if we can actually know rekey from an advisory point of view, but that might get the offer out one day quicker. The customer isn't aware whether it's going from 12 days to 11 days. They still either want the house, or they want to remortgage, or they want to raise capital. So I think, and we're seeing a few now, it's how we actually help the consumer journey go from maybe a 2-3 hour interview down to an hour and a half, that might actually include protection and general insurance as well, by using the technology around to either do some of the heavy lifting that's there at the start, collecting the fact find, dropping it down, working how the consumer wants to work in the time frames that they want to work as well. So I think we need to do that. So I think that will be gradual. So I don't think we're going to get a big bang at either end, whether it's the lender integration or the consumer portals that are there, but it's going to be gradual. But advisors need to embrace it. It's going to help them. They shouldn't be afraid of it. I don't think it's going to replace advice.
No.
Our view is it's all about wrapping technology around the advice process and actually giving advisors more time to do the advice rather than the admin side of it.
It's quite easy to be sucked in by fintech and almost have technology for the sake of technology. So that's quite an interesting point there, that obviously putting the customer at the heart of every decision that's made and every process that you look at integrating can only mean step change really for the fintech within brokers.
Ultimately, the customer will decide how they want to deal with us.
Yeah.
And they may want to deal with us in a number of ways during that process. They may want to start with a technology focus. They may then move to face-to-face or telephone, and then they may move back to technology. They will tell us, and each customer will be different.
Yeah.
We can't just design it and go to the customer, that's it, because some of them will go, that's not how I want to talk to you, I'll go and find somebody else. So we have to be mindful of that. We still have to create that flexibility within the process.
Yeah. Well, we still have brokers faxing documents through to us.
Yeah.
So, yeah, you have to be accessible to all people in many different ways. Totally agree.
Absolutely.
So one of your other hats then, you're also chairman of the Association of Mortgage Intermediaries. What do you think that adds to your role?
It's an interesting one because I think it gives me an overview of the market. So at the moment, obviously, run a club, so very well understand the directly authorised market, the challenges and problems it has and it faces, and we work from a compliance point of view as to how we can help those firms. But I think sitting on the board of AMI, it gives you that understanding of the issues that practitioners have, so the actual advisors, because we have a number of practitioners that sit on the board who obviously tell us what they think, but it also gives us an understanding of what the packages, master brokers, the networks, the challenges that they face, because we have those discussions and debates at board. Because when you walk into the boardroom, you're there representing AMI, not your day job, so you have to take those away. So you have those debates around many areas of the market and understanding. So it gives you that wider understanding that probably you wouldn't have. And it also means, because of the interaction that you have with the regulator, so you might have the interaction as chairman a lot earlier than we would seen before the papers come out, so they will talk to you, they will gauge your opinion, as will some government bodies. So you get to understand maybe what's coming down the track as well, which is good, because it allows you to actually think that through and see what effects that will have on the industry, and how as a trade body we need to react to make sure that we're protecting our members, and ultimately making sure that the customer's getting the best advice as well, and being protected at the end.
Yeah, because we spoke prior to the recording that a lot of the communication coming out of AMI is really good. It clarifies a lot of complicated issues for brokers, and it makes sure people are fully aware of what's going on in the market. So that is a real help to mortgage brokers. Yeah,
it's a challenge, because a lot of things that happen within AMI are behind closed doors. So I say the regulator or government are asking for thoughts and feedback on things that we can't talk about.
Yeah.
And some of the things that we get changed and amended we can't talk about. So it is nice when it gets recognised that there is other things that we do as well. So the updates and that come out are there to actually try and guide and help and point members to either talk to their network about it and check things, so or talk to their mortgage clause or compliance providers about what they're doing, because ultimately we're there to help and guide on that side, and then also to stand up and be representative of the trade body with the regulator as well.
What trends are you currently seeing within the mortgage industry?
There's a number, actually. So fintech, as we discussed,
Yep.
It's the buzzword. We're seeing lots of things. Everybody's talking about that. So I think that is definitely a trend that's coming. The other trends that we're seeing are sort of the challenges for advisors is time. It's back to time to actually do the job that they want to do those client bank reviews, to actually deal with their customers proactively rather than reactively. It's keeping up with that regulation, it's keeping up with that education. So time is really important aspect for advisors. If we think the market's roughly about 400 billion at the moment, if you include product transfers, the last time it was around that size back in 2006, there were over 30,000 mortgage advisors. There's about 13,000 now. So if you think that actually, and the percentage that's being dealt with by the intermediary market is about the same.
Yeah.
So if you actually think that, it's no wonder they're actually pedaling really hard, and that's where we think technology will help. Back to our previous point, it is finding that time to do those jobs proactively rather than chasing your tail. And the other aspect which follows on from that as a trend is we get asked more and more is, do you know where we can find any more staff, any more mortgage advisors? Because firms are desperate to actually do that job and get that new blood into the market.
So where do you think the market will be in 12 months? Obviously, no one has a crystal ball, and there's a lot of unknowns out there.
Yeah, I think it'll be a similar shape as now. That'll be depending on where the mortgage market study lands. I think that's the unknown. I think that's more of an unknown than Brexit, if I'm fair. I think with Brexit, I wouldn't say I'm relaxed, but everybody still needs to live in a house.
Yeah.
Irrespective of the wider economic issues, everybody will still need to live in a house. Everybody will need to either buy or remortgage and refinance and do different things. It might become more challenging than that, but I think the mortgage market bit could be the key bit. I think product transfers and pound for pound remortgages will be challenged by the lenders over the next 12 to 24 months as they use technology to maybe claw back some of that business out from the intermediary market. And I think especially if execution only gets expanded as it's being considered in the mortgage market study, it will allow that fintech aspect to actually work. So I think for advisors, to me, it's though looking at the bit that probably moving forward can't be run through an execution only model. So I wouldn't expect first time buyers to go through an execution only model. Especially with shared ownership, Help to Buy, all the areas there. I wouldn't expect the new build market to overly go through the execution only. Self-build, buy-to-let, again, they probably wouldn't. Some of the self-employed contractor space gets a little complicated. Would that go through? And then obviously bridging commercial secured loans. So I think there's still lots of areas of debt consolidation that won't be able to go through that model. So it won't be doom and gloom if that changed, but I think advisors need to be aware and look at what their current model is and say, well, actually, if that does come through, what percentage of my business could be lost as a pound for pound or a product transfer, and what do I need to do, and look at my business to make sure that it's still in shape and able to flourish over the next 12, 18 months.
Interesting. And what would you say is the best part of your job currently?
Meeting members. It's not as much as I used to do previously. That's the challenge when you have more staff. They actually go and do the job that you used to do. But it's understanding their issues and their frustrations, and then actually designing and delivering a real solution to those problems gives you a lot of satisfaction, because actually that's what we're there for as a club, as a compliance provider, is to keep members safe and deliver solutions to help them grow their business. And actually seeing and still being able to do that and knowing it's coming back from feedback from members is a great feeling.
And the worst?
It's the opposite to that. It's the fact. It is the fact that due to the fact that I've now taken on another number of areas within the group, we've grown the team, so I've had to delegate some of those roles. It means that I don't get out to see the members as much as I used to. And it's trying to be, I know it's technically for the good of the business that we do that, but it's definitely a frustration to me is actually going out to our member meetings, going out to members' offices. I am going out tomorrow to see 2 members, and I'm keen to keep doing that, because I think ultimately, you can sit in your little ivory tower thinking we know what's best for these firms that we serve, but ultimately if we don't talk to them, and yes, we get feedback off the rest of the team, but sometimes it's nice to look a member in the eyes and get it face to face off them and understand those frustrations. So to me, not being able to do that as much as it's hard work.
And finally, if you could make only one change to the industry, what would it be and why?
Just one.
Just one.
Just one. Again, I thought about this for a long time because there's so much.
Yeah.
And then it was, who did I want to offend or not? I think the bit that concerns me and I'd like to change and understand more is claim management firms. I understand why they're there to a certain extent, but it does really frustrate me. Because ultimately, if they're there in doing things, that to me means that we as an industry have not accepted our own faults. And so we need to do that. We know that those type of firms will always look for the next area, and some of it is spurious, to say the least, and they do send letters just hoping to catch things. But I think the fact that they're there means that we need to keep on monitoring ourselves and self-regulating ourselves more. And if us, and by that I mean lenders as well, and the banks and building societies actually sometimes go, yeah, we got that wrong, let's just compensate and sort that out, because ultimately it just costs us more otherwise. But it also wastes a lot of time trying to manage ones that actually aren't going to go anywhere, and it's just somebody trying it through a claims management firm.
Yeah, and as you touched on earlier, brokers are already short of time.
Absolutely.
Yeah, brilliant. That was really interesting. Thank you for your input on all of those. It's been an absolute pleasure having you along.
Thank you for inviting me.
To hear the rest of the series and be notified first of future episodes, hit subscribe. And to discuss any of the topics covered in today's CRYSTALCAST, or any other specialist finance requirements, call us on 01827 301070 or visit our website at www.crystalsf.com. Thank you to today's guests, and as always, thank you for listening.